Welcome to Second Take, the show that focuses on the issues behind the news. This week, Ramaphosa moves to revitalise mining, Australia ensures its mining competitiveness, and Barrick Gold buys Randgold Resources. Mining Weekly editor Martin Creamer tells us more. Welcome, Martin.
Thanks, Ashni.
Now, President Cyril Ramaphosa recently revealed his economic stimulus package. What did it mean for mining?
I was very, very happy with that, and the word recovery plan is also very important there because we've got to recover. We've got to do a lot of recovering. We haven't really got a huge amount of money to stimulate, but you can stimulate with leadership, with the way you speak. And, you know, he delivers very, very well, and he encourages people to get enthusiastic about investment, particularly business, because he's close to business. And business is sitting on a lot of money to invest at the moment. So they can be tremendous partners for a government that hasn't got money. And he's very much aware of that. But importantly, he said it is imperative that South Africa recovers from a point of view of investment in mining or lack of investment in mining, and also recovers from being so backward in exploration. So he understands what the industry really needs at the moment. And that those words, particularly investment and exploration, are very important at the moment because we've fallen so badly behind. And there were so many other aspects of that recovery plan which are so important, you know, particularly around infrastructure. And the 400 billion that he's putting towards infrastructure, there's also going to be an element there that will help mining, because he's talking about making rail far more efficient. Now we know that when you get onto that rail, you just pay an arm and a leg and you don't get good service. For instance, I mean, that phosphates mine that's going to be built in the Western Cape will actually ship its phosphates from Saldanha to Richards Bay. And that will be infinitely cheaper than what Phoscor, a state operation, pays to actually rail its phosphates from Palabora down to Richards Bay. I mean, you know, it's just ridiculous that rail is so expensive. So they're also looking at the tariffs around power. You know, you've got to look at some of these industries and say, if you give them a proper power tariff, we can compete in the world against the Chinese, we can compete, we can hold jobs. If you don't, you're going to export jobs, because those smelting operations are going to have to close down, particularly if you come now with a carbon tax as well. So they're looking at ports, making them competitive. They've got to be globally competitive. The word is globally competitive everywhere here. And with business as a partner, you will get that. I would like him to have announced a task team for mining like he has done for infrastructure. We would have then had something to focus on. But you must realize that the mining industry, unlike all the other industries, has been in intensive negotiation with the government over so many different ministers of mineral resources, over so many different periods of Jacob Zuma being there, and you know, so they have actually got a built-in task force. And that particular Minerals Council South Africa also now has been very conscious of the exploration side of things. In other words, they started to think about the little guys as well. And that's where they have fallen short probably in the past. But now you see they've got an emerging mining section. You get people in there, you get juniors going. And we know that Gwedi Montash said he has keen interest in promoting junior mining, but junior miners in the exploration right at that level, putting 20 billion towards that, as he told the people in Australia. He didn't tell us. But I suppose the Australians have got this tremendous background in exploration. You know, we always produce mining engineers here because our ore bodies were so huge. You didn't have to explore for them. They jumped out at you. And so we just said, oh, sink the shaft there. And we normally made a mistake where we put the shaft. But the Australians, they've had a background of having to search and search and search. And actually, who stumbled over our gold here? It was an Australian. You know, he tripped over the outcrop at long laughter. So if it wasn't for him, you know, we probably wouldn't have been here, because this has got everybody rushing when they realized how big this ore body was, the biggest the world had ever seen. And that's why we're all sitting in this area here, because gold was a natural sustainability industry. It created sustainability all over here that you're still seeing. And we need to do that with all our precious metals and minerals.
And speaking of Australia, the country recently launched its Resources 2030 task force.
We must get to see what these guys are doing. You know, they are starting to talk talk even about downstream. You know, they never used to talk downstream. They just used to say, you get your spades, you dig that stuff out as fast as you can, you put it on the train, you get it to the port and get it to China. And let them pay you as fast as they can. That was their mentality, and you see even now. I saw this word downstream, I nearly fell over, because, you know, this is their new plea to get some sort of direction for mining. It's a 2020 to 2030, resources 2030. They've got a task force, and they want to come out with this national resources statement. These are all things we should be copying, because we got to compete with these guys. And they're saying, no, they must advertise their reputation. They've got such a fantastic reputation. What are they doing? They're saying we haven't. So we've got to return our reputation very, very fast as a very good, reliable investment destination. And they are incentivizing people to live and work in a mining area, because a lot of their mining areas are remote. People don't necessarily want to go there. They've got to be fly in, fly out is the basis. And now they're trying to incentivize people to rather live there and work there. And it might be better for the country's development, probably, because it's too much around the coastline, you know, very little in the middle. So all sorts of new thoughts going in there, and we should be studying carefully what they're doing. They're always coming up with some new incentive plan. They've got an incentive plan for exploration. Now they've got this Resources 2030 Task Force. Sounds good, Task Force. And they've got to make a national resources statement. And they've got to make sure that they promote Australia. We should be promoting South Africa. We've got more resources here, and we've got more people that need the benefit of the resources, far more than Australia's 20 million people, whatever they got. We've got our 50 million plus that need this driver of the economy. We must see it as a driver of the economy. Hopefully this will happen, but I do see move towards that.
And lastly, Barrick Gold has agreed to buy Randgold Resources in an $18.3 billion share deal.
You know, it's a very interesting thing, because 4 months ago we had Dr. Mark Bristow give us an interview, and he said gold industry running the risk of becoming irrelevant. And he was saying, look, you've got to get the attention of investors, because the investors are looking elsewhere, because gold is not actually giving the investors a return, so they don't want to invest in it. And he's come along, of course, 4 months later, and he's emphasizing the big capital C, consolidation. Now, we always used to have commentators in South Africa that used to say we need to consolidate the gold mining industry. We went through a big period of consolidation ourselves. You know, there were periods when just single companies would do up to 20, 30 acquisitions, and they would get their companies bigger and bigger, because we had a lot of different companies on the stock exchange, and you know, they would have a peak and then they would start to fall, and you needed to give them an infinite horizon. Well, I think they are giving, with this deal, Randgold and Barrick, more of a it's more than just an infinite horizon, because along comes Dr. Mark Bristow, who started here in the mid-90s, just down the road in Selby, you know, with this concept of getting Randgold Resources. And he had as his leader Peter Flack. And Peter Flack said, you know, we actually looking now at what was the mining house at the time. And we actually want to get rid of people because we feel that they don't know how to mine properly here. You know, they had a strategy. The company was saying, well, our strategy is to die with dignity. And that's the way they were thinking. But at that stage, they had also sent Dr. Mark Bristow, a geologist, into Africa. And Peter Flack told me confidentially he was going to fire Dr. Mark Bristow along with a whole lot of other people.
Wow.
He said, but when he listened to what this fellow was doing in Africa, he said to him, "You, my CEO." And they created Randgold Resources, and they listed it on the London Stock Exchange. Quite disappointingly, they weren't happy with, you know, the acceptance of the shareholders at that stage, and it was tough going. He was up in Africa there, and to just get a viable mine was difficult. And soon the gold price plummeted to a very low level, and he still battled through that. And so he does know how difficult it is in the downturn, and that's why he's always made sure that he discovers and develops, because he doesn't want to pay a fortune, someone else a fortune for their asset and then try and work this out. He knows exactly what's in there. He discovers, he develops. And now his model, which he's developed, is, an on-site, on-mine executive management. So executive management empowered. They're on-mine, on-site. And this has been a fantastic benefit for him. He's always got good assets because he's a geologist. He won't take assets that won't give him a margin, even if the gold price falls to $1,000 an ounce. He must still have a 20% margin on that. And then he gets his executive team empowered. And you can see how he's continued to pay dividends, higher dividends. So of course he's attracted the attention of the big companies like Barrick, who have now said, okay, yes, the gold industry is running the risk of becoming irrelevant. You come in, we'll chat. You take over Barrick now. You take over Barrick as the CEO and the president. You run this combined entity that we will have, Barrick Randgold. And that is an incredible accolade for him, that he's now going to put his model into other places other than Africa. And he was starting to look across the Atlantic, as we spoke the last time, but I thought it was only geologically because he's in Africa. But of course he's now in a lot of places in the world with Barrick, and I see even releases coming through now, other people saying, well done, we can join you, because there are explorers there that can offer quite a lot. And I think there are a lot of single mine entities now that can be absorbed, but they've got to be absorbed cleverly. They've got to make sure that what they absorb is value accretive, and then put a good management into it. And you could probably see a company like Barrick really do well.
Thanks for speaking with us, Martin.
It's a great pleasure, Sashni.
That's it for today. Join us again next week for more news analysis on South Africa's mining industry.